almost never speak about this, but you're a very straightforward shooting guy in an industry where straightforwardness isn't common. Okay, let's just put it that way. And if you had listened to the top so-called known experts anytime in the last few months, you would never know the industry is doing as poorly compared to what they make it sound like. So one of the first things I would caution new money coming in is to try to get a real grip of the understanding of whoever or what group you're listening to, what actually has been their actual performance versus how good they say. We have somebody that's a classic household name in our business, but if anybody ever knew that person's particular track record, they may think twice. But having said all that, this is a business where failure is the norm.
In today's news recap, silver prices hit 3-week high on optimism over Fed rate cut, up 6% in July. Silver prices extended their winning streak for the 8th consecutive trading session today to hit a 3-week high of 92,550 per kilo on the MCX as softer than expected U.S. economic data reinforced expectations for Federal Reserve interest rate cuts. Prices have rallied 6% in July so far, on track for the biggest weekly gain since mid-May. Markets are anticipating a rate cut from the Fed in September due to waning inflation, a slump in the U.S. job market, and a cooling economy. Traders are currently pricing in a 73% chance of a Fed rate cut in September, according to the CME FedWatch tool. In periods of falling interest rates, gold prices typically ascend as investors find bullion more attractive compared to income-paying assets such as bonds. The U.S. PCE index showed that inflation in May slowed to its lowest annual rate in over 3 years. Core PCE prices increased by only 0.1% from the previous month, the smallest increase in 6 months, while the annual rate eased to 2.6%, the lowest since early 2021. Additionally, U.S. job openings rose to 8.14 million in May, and first-time applications for U.S. unemployment benefits increased last week, with the number of people on jobless rolls rising to a new high by the end of June. Now we'll show you more clips, but remember to like and subscribe if you like our recaps.
Best of my knowledge, first of all, there's no official ending. There wasn't a formal pact signed. It was always an understanding that had worked. And of course, that dissipated the day, if you remember a couple of years ago when our oil prices went up a lot and our gasoline prices, and Biden made a quick rush over to Saudi Arabia to kind of scold them, if you remember him fist pumping the Saudis. And since then, the Saudis have looked every way possible to get away from being involved with the United States. So I call it more Bidenomics took part and teared apart whatever understanding of that pact may be. But if you look at the recent news out of the Saudis now, very interested, speaking openly about joining the BRIC nations, very interested in commencing trade outside the dollar and all. And these are all things that I think people are going to get more of an understanding, Jesse, this fall when the BRIC nations formed again. And when they realize it's no longer 5, it's no longer 11, but it's going to be somewhere between 30 and 40 countries, and probably with real expectation that that number can get to 100 or more before it's all said and done. And I think only then will some people, hopefully in the financial community, start to recognize that the BRICS is not a joke. It's not anything to laugh at. De-dollarization is a fact. We continue to see less and less usage of the dollar. And all the gold, and I don't want to skip over in case you had questions about that, but the main reason for gold's rise this past 12 to 18 months is because people, countries see the inevitable need for an alternative to the dollar, or at least the world will be broken up into trading packs, and something other than the full faith and credit of somebody's paper is going to be expected to be the reigning, or at least compete with the dollar. And that's the main reason why so many people have purchased gold, and gold will be in some form either backed digitally or some way, shape, or form used in whatever it does eventually come together. It's still probably 2 to 3 years away, but it's moving in the right direction. History, I'd be phenomenal. I've had some really good years even lately. But when you look at how much devotion I gave to that market and how much my portfolio was down, and how fortunate enough that my wife has not gotten a divorce attorney yet on this situation, When this year ended, Jesse, after the 2 years we basically went through, I basically said, there's no way this can get worse. I mean, we got to be at the bottom. And, we started off, we had a little bit of a rally in February, and I started to pat myself in the back. And here I am, as I told you, as we talk here we get to the end of June, and we're watching wholesale liquidation today by funds of juniors across the board. And those that remain in it wish they never were in it, wish that somehow overnight, which is not going to happen, be able to get out. And part of that is, and you and I discussed this, and I think it's important, if you don't mind me taking a minute or two. The market that I knew, and I had left it for a while, but the junior resource market and mining shares in general, particularly the smaller ones, is a completely different species now. It's nothing like it once was. First of all, brokers and financial advisors don't build book of businesses anymore driven by commission. So they're not out buying and selling individual stocks, particularly in the junior market. So the hundreds or thousands of brokers that used to be in North America built part of or all their book buying and selling junior resource stocks, they're gone. There may be a handful left, but they're a true dinosaur. Well, that junior resource company still needs to meet those end users if all those same are out there. Now, I'll argue they're not. I'll tell you that as much as I dislike, and I dislike a lot, cryptocurrencies, they have stolen the lunch of the junior resource market. The people that otherwise would have been in the junior resource market, especially the younger you go down the age, are over in that world. And so now that junior mining company still has to find end users just like it did 10 or 20 years ago. But the challenge is 100 times harder. And there are whole other things, institutional wise, there's no real mining desk anymore.
In today's episode, Peter Grandich is concerned about the complacency he sees in the market. Despite worsening economic conditions, many investors seem unaware of the potential for sudden and dramatic changes. He believes that significant political, social, and economic turmoil is on the horizon, which could lead to unexpected market reversals. He highlights 5 major issues that could impact the markets: growing debt and deficits, a retirement and aging crisis, economic effects of immigration, the strategic moves of BRICS nations, and severe political divisions in the U.S. These factors, according to Peter, could worsen market conditions and lead to instability. Peter also stresses the importance of holding physical assets like gold and silver as a safety measure. With the global debt level so high, he warns that the financial system might face severe challenges. Additionally, he notes that water is becoming a scarce and valuable commodity, potentially more critical than any other resource in the near future. Now we'll show you the best clips of the latest interview, but first, hit the like button, smash the subscribe button, and turn on notifications so you do not miss out our daily recaps, and check our description for more info and credits. Enjoy the episode.
There may be one old guy like me that they left there. He or she is not seeing any new money. They kind of hold the hands of the remaining few people that own it. So the industry itself has such a challenge from an investing standpoint, and the frustration, and anybody that's still in these things has this, is you see these metal prices. Jesse, if you went to Times Warp and you saw me 10 years ago, 20 years ago and said, Pete, I went to the future. You're not going to believe this. Gold is 2,300 heading for 2,500. Copper is well over 4. Used to trade at 80 cents a dollar, $2. Silver's, going near $30. I would tell you the mining shares had the quadruple in price, and yet they're down 60, 70, 80% from highs of recent years. So somebody's got it wrong. Either I got it wrong and I missed the bell, they closed the door and I didn't hear it. Or if all this need for eventually for metals that are just to sustain where life is heading, whether it's through AI, EV, general necessities and all, at a time when grades, this is the untalked about story, Jesse. You look at a major producer, the world's largest copper company, it used to be on average 3% grade, that mine. They're down to 0.5 now grade. So they have to move 6 times as much tonnage to get basically the same copper. And that's all around the world. There hasn't been Chile used to put out every 2 years a new mine. I don't think they put one out in a couple of dozen years. So somebody's got it wrong. And if I am correct that eventually one day after all this pain and suffering, we'll wake up and go, oh my God, there's such a need for metals and there's so few people that are ready to go out there, find it, and develop it. Until that day comes, it's going to be a tough sled. And I can understand people fully now just bailing out, even though it would be a contrarian's delight to enter here now. But two other things have to happen. We need to see what's taking away the interest slimmer, but we don't want it to crash because we don't want that money to be wiped out. And we also need to see somehow, some way, more better discoveries. That we haven't had a world-class mining camp or run where it just attracts people from the outside. And everybody thought that was uranium, and I was one of them. Okay, I did get out early in the year, but everybody, and the fundamentals are still there. In fact, to this day, I would argue uranium has the best fundamentals of all the metals. Yet why isn't the price going through the roof, and why isn't most of the smaller non-producers? Because the market that used to exist for that end user doesn't exist at the moment. And the only hope is, will it return?
What do you think of Peter's take? Is he spot on? Do you think all of these self-proclaimed experts are well-informed, or are they just as clueless as you are? Post in the comments section your honest opinion. Share with us your plans with your gold and silver stacks. And watch this video right here because it's a perfect fit for you. I see you on the other side.